Man, there's some good movements in the market today. Tonight. I see another potential, which would be the EurCad. What's interesting about the EurCad is, let's say, it passes this price, right? It would make a H4. Once it passed this price, it would be a H4 divergence, right? As you can see, it was a double divergence. It did the divergence, it dipped. Went back up, it's on another divergence. It might do another divergence and it might dip. So there was like one divergence dipped for a good 150 pips. So if you had taken that trade, you would have been good because it's in the zone. Now it went up again, hit the same level, that area. It went down 89 pips, right? So now, why is it bouncing back so much? So let's do the let's do the EurCad analysis. Now, as you can see, it's currently in a weekly support, right? It's currently in a weekly support, strong weekly support. We could even consider that a monthly support because you see it's in touches that price, touch that price. When that price dipped, right? So this is a good sell potential. Might even be a good sell reversal because if you look at how it went up for about a couple of months now. Now it's at its peak of, it's at a monthly area, monthly resistance. Did I say support before? I don't know, but let me just correct myself now. It's at a monthly resistance zone, right? So the way I trade is I look for the market to do what I want it to do. If it doesn't do what I want it to do, I'll pass on that trade. I'm very blunt when it comes to that. So what I want the market to do for the EurCad, if there's no news before then, of course, or nothing tragic happened in the market, is I want it to go past that price, goes in back into that area. Once it goes in back into that area, I'm going to wait for my confirmation to take the sell. Now this sell, if you're a more experienced swing trader, you could look for it to take a good amount of pips, because it's in the monthly support. Now, where would be my first take profit area? Would be around here. This is where I would consider taking some profits, take some money out of the market. That area, if I want to play it safe, right? If I'm more on the aggressive side, now I would consider taking profits or a second part of profits into that area. And probably where I would consider taking the rest of my profits would be around that area, right? Now, if you're a little bit more aggressive and you think the market is going on a strong sell while I'm trading and I see it breaks trend line, it breaks supports very strongly, right? This would be my area where I would take most of my profits in terms of a swing. That area, if I want to do a long-term swing. So you can stay in that position for a couple of days or weeks if you want to. If you're more of a short-term trader, but you still want to take the trade, I would take most of my profits or part of my profits would be in that area first. So that would be a good, let's say, I don't know, let's say we're past that price, a good 100 pip, right? Second level after 166 pips. Now, if you're more aggressive and more patient, you can go down to all the way 300 pips to the 380 pips range. So this is my analysis for the EurCad. Some of you want stronger confirmation before entering trade, but that would be for the swing traders though. Is if you're a swing long-term trader, you could just enter as a good entry point. You could wait for it to break that trend line. Once it breaks that trend line, right? Once it breaks that trend line, you can take position, enter that trade, and then you'll be good to go. And again, I'm not a financial advisor, so you must be able to manage your risk, or probably that's something I'll teach you guys how to do in the future. I don't know yet, but you have to be able to properly manage your risk when it comes to entering those type of trades, right? So that's it for this one. Thank you.